So what we did last time, we actually discussed our topic IFRS 15, and I'm sure you people have seen the video for that. We should be going back to straight. We will do some questions I want to do, and then we can move on to our new standard today, which is IFRS IS 16, tangible non-current assets. So with regard to revenue, let's see this question number 82. Let's first do 82 and then we will do 83. Okay, please, I'm giving you 2 minutes. Quickly read this question and then we do together.
Okay.
Yeah, what is number 82? What do you understand? What should they do? Yes, Basit.
Yes, sir. I'm
You are
actually
reading?
reading.
Okay.
Yes.
Okay, please.
$90,000 current liability.
Okay, you said this one, and
And third one.
which one?
Third one.
Third one. So it means 3 and 5.
Yeah.
Yeah, option number D. It is correct. Because what is happening? They receive order on 25th of June and their year end is on 30th of June, 5 days. And during these 5 days, they have not, supplied any goods. So actually the total order value, order size is 900,000. The customer is giving 10%, but they have not finished their credit check. It says that, on 30th June, Cambridge had not completed credit checks on Circus and had not dispatched any goods, which means that they may or may not dispatch the goods, number one. And more importantly, they have not delivered anything. They have not, completed any performance obligation. So there should not be any revenue. So there is no revenue earned. Include 900 in revenue for the year. Of course, this is not possible. They have not delivered the goods. Include 90,000 in revenue. This is also not possible because this 90,000 which they have received, they have not given against anything. Create a trade receivable for 810. This is also wrong because trade receivable is when you already have delivered the goods and when you already have issued the invoice. You have not done anything. So there is no revenue, and the 90,000 which you receive, that will be treated as your current liability. So you can, the double entry, if they ask you to make, you can say debit cash or bank 90,000, credit,
Credit.
Credit advance income.
Deferred
Income
advance.
or advance income 90,000.
Deferred income, yeah.
So this was the answer. Very simple question. I just wanted to, feel the taste. Number 2, we do 83. 83 is also a theoretical question. We read it together. It says that Repro, a company which sells photocopying equipment, has prepared its draft financial statements for the year ended 30th September 2004. It has included the following transactions in revenue at the stated amounts below. Which of these has been correctly included in revenue according to IFRS 15? So we have to find out which of these has been Correctly recorded. Correctly recorded, they ask us. Okay. So agency sales of 250,000 on which repro is entitled to a commission. So they include 250,000, which is agency sales, and they add it into their revenue because they say it has included the following transactions in revenue. Agency sales do not come in revenue. 250,000. It's not there. Okay. I mean, this is a sale volume. You have to talk about your own commission. Not the entire 250 does not belong to you. From 250, which you sold on someone's behalf, agency sales mean when you sell goods on someone's behalf. And you may be getting some percentage out of that, maybe 5% or 10%. So 250,000 does not belong to you. Only that 5 or 10% will be something which belongs to you. B, sale proceed of 20,000 for motor vehicle, which were no longer required by repro. So this is disposal of non-current asset. So you had some motor vehicles, you sold them. It was a non-current asset, no longer required by repro. So when you sell your non-current assets, so the disposal proceeds, they do not go into your revenue, because we said that revenue means that the economic benefit which you receive by providing the goods and services of your core activity. Selling non-current asset is never a core activity of a business. It was just like you had a car, you sold it. It's not your revenue. So it will not be added into revenue. Yes, if you made any gain or loss on disposal, that gain or loss on disposal will be shown. We will discuss that gain or loss on disposal when we do our tangible non-current assets. So this is also wrongly reported. It should not be in revenue. C, sales of 150,000 on 30th September 2004. The amount invoiced and received from the customer was 180,000, which included 30,000 for ongoing service work to be done by repro over the next 2 years. Over the next 2 years.
Not completed.
Yeah. So what they are doing, sales of 150,000. They are recording 150,000. Okay. So actually they received 180,000. Out of 180,000, they only recorded 150, and 30 they are not recording inside the revenue, because 30 is ongoing service work, like the sale of the car and the service of the car. So this is correct, because although they received 180, but they included in only 150. So this is correct. So C is the correct option here. Let's see. Do you understand the point? Just pay attention to numbers. Total amount you received 180, but you are putting in sales of 150, because remaining 30, they told you that that is the servicing thing. So it means 150 was related to the sale of the goods. This is sale of the goods, 150. This is the provision of services, and they are not including provision of services, because they just do it on last day, 30th September, and it is also 30th September. So no service has been provided, and therefore no revenue has been recorded. You did not even provide 1 day of service. If you had provided 1 day of service, maybe $1, $2, or $10, whatever you would have recognized. But here you did not provide any service. So 150 should be recorded, and 150 they did record. D, sales of 200,000 on 1st October 2003 to an established customer, which with the agreement of repro will be paid in full on 30th September 2005. Repro has a cost of capital of 10%. Okay, so what should we do with that? This is not there. Why should they not include?
Because they're getting paid at 2005.
Okay, so but they already have sold the goods, and they have established customer, so customer will pay. Like I told you that there should be a possibility that customer has the ability to pay. So they sold the goods, they invoiced 200,000, customer will pay after 2 years. Can they include 200,000 into their receivable?
Yes, sales happened. Yeah.
They made the sales, but they should not record 200,000 as receivable. You know why? Their cost of capital, what they should do, you should pay attention here that
Yeah.
in D option, what is happening? You invoiced today. How much? 200,000. And it says that receivable. It will be received after 2 years. So what you need to do, you need to discount it.
Okay.
Because your receivable is not as of today 200,000. You have to discount it to today. And how do you do that? You will do it with, at which rate? Their cost of
10.
capital is how much?
10%.
10%. So they should be discounting it at 10%. So they should be doing it 200,000 divided by 1.10 power 2, like 2-year discounting. 2-year discounting they should be doing. So they should be showing in their financial statement the revenue is 165,000. You know what is the remaining part between 200 and 165? What is the difference? You remember last time we did one thing? Significant financing component. Do you remember from last lecture?
Mm.
Yes or no? Did I explain that? Did I
Don't
explain
remember.
that? Huh?
I don't remember.
Daniel, Basit? Hello, my friends. Explained it or not? The financing component thing, did I explain in last lesson? I'm just confused. If I did not, I will
I
explain
don't,
now.
I
Was
don't
it
think so,
last?
sir. You explained.
Was it last class?
Yeah, last lesson, IFRS 15.
I think I missed it.
Okay, what did I explain in last class? Did we do IFRS 15?
It was Sunday.
Like, yeah.
Yeah. Okay. Sunday I missed it.
Okay, you missed it. Please help me. I'm lost. Basit, Karthik, did we do IFRS 15?
No,
Yes,
last
sir.
class
We did.
Okay, let me tell you. In IFRS 15, I should have explained you which concepts I should have explained you. I would have explained you the concept of performance obligation.
Exactly.
The performance
Yes.
obligation with reference to car delivery and warranty. Did I explain that thing?
Yes.
Okay. Then second thing I should have explained you with, like, you know, variable consideration, you know, refund liability. When a customer can return some goods. Did I explain this also?
Yes.
When you say, I said that maybe you sold 100,000 good, customer can return back 5%, right?
Yes, 5%, exactly.
Okay.
5,000.
Then I talked about, probably I should have talked about financing component. Financing component, it means that, let's suppose the cash price of some equipment, the cash price of some equipment is, say, 100,000, but you sold it for 110,000. Why did you sell it for 110,000? Because there was a credit period of 1 year. So when such a situation happens, that when you are giving customer some extra time for payment, so you are giving him 1 year payment, so there is $10,000 you are getting extra. This $10,000 is extra. This should be treated as finance income. We call it significant financing component. So revenue, although I sold equipment for 110,000, but in revenue, I will only show 100,000. So what you should do here, that here your revenue should be 100,000 and you should have finance income of 10,000. Okay. Because this 10,000 which you are getting extra, you are not getting extra for that equipment. This 10,000 extra you are getting for a late payment of 1 year. So this is kind of an income, finance income for you. So you are earning interest here. Otherwise on cash, the price was $100,000. Am I clear on this thing?
Yeah.
Yes, sir.
So this thing is called financing component. And then I should have discussed one more concept here was allocation of discount. Okay. Allocation of discount. Did we discuss that also? That you allocate discount between different performance obligations in the proportionate method. So these are the 5 things which you should be careful on IFRS 15. And this thing, this last point is about significant financing component. Because now they ask us in this question that how much revenue they should record and which of the transactions are correct with reference to revenue. And I said that this option is wrong because it says that sales of 200,000 on 1st October 2003 to an established customer, which with the agreement of repro will be paid full in 30th September 2005. So the customer is paying 2 years later. 2 years later. So it means that whenever you are giving a 2 years long credit, it should not be on the cash price. There should be some financing component as well. Always, always. And to support this argument, they give you this additional information that it has a cost of capital of 10%. So he is actually giving you a clue. He is actually giving you a hint that you have to discount it. Because if I say today in my books, if I say in my books today that I have a receivable of $200,000 and I'm sorry, my revenue is $200,000, that would not be correct. Because revenue would be only 165,000 because I discount it for 2 years. You know, how do you discount that? The discounting, you remember the discounting formula? Okay, you have not done discounting present values. Have you people done the present values?
Yeah.
Where? In which paper?
F9.
F9. Others have not taken F9. Karthik? Sorry,
Yeah.
Basit, Daniel?
No, sir.
Do you know what is discounting?
Yes, sir.
Okay. Okay, I will leave this discounting topic here because I'm going to explain it very soon when I'll do IS 37. So I will not spend a lot of time here at this point in time because with revenue we can move on. You just remember that you have to receive it after 2 years. So your formula should be the money which you receive in future divided by 1.1 and divided by 1.1 2 times because it is for 2 years. So I take power 2. So you call it like 1.1. 1.1 means that, 1 plus 10% actually. You call it 1 plus 10% power 2. Okay. This is how you should write down. Okay. So 1.1 means 1 plus 10%. So your answer is C. I wouldn't spend more time on that. We stop it here. I go back to our question number, this one, which is 79. Please, I give you 2 minutes. You read it one time, please. And then we do together. Now this question requires some calculation. It is important. contract asset we need to find out. What is contract asset? Contract asset is your kind of, receivable. It is your accrued income. If you remember in IFRS 15, yesterday we started that how much you still have to receive from that particular contract. So in such a question, first you need to always have to determine that, how much should be my, how to say, profit, how much is my cost, how much would be my sales revenue. So these numbers we have to calculate. So if we need to see that how much is your total revenue. So your contract value is 120,000. And then your cost, how much is your cost? Cost, you can say that cost is incurred. What you have already incurred is 48,000. And then we say expected cost to complete. Like the job is not complete yet. So it is an ongoing job. 48,000 you already have spent, and it is expected that 48,000 you will have to spend further. So your total cost will be 96,000. So you can say that your expected profit is 24,000. So this is your expected profit, $24,000. Okay, great. Now, then what happens? Now I have to calculate what is the situation until today. So I can say that until today, I can say that my incurred cost, this is the cost which I'm going to show into my P&L because I have incurred it. So I've already spent that. So incurred cost is 48,000. Then you have to add profit so far. How much profit you can recognize so far? So far means until the end of the year, until this date. So if you pay attention, they tell you that the contract is agreed to be 45% complete, which means the client has given approval that 45% of the job is done. So if 45% of the job is done, so your total profit is 24,000, 45% of the profit you can recognize. You can say that, okay, 24,000 into 45%, this much of profit I have already, I can recognize. So until today, this is my cost which I have incurred, and this is the profit which I should receive. So my total receivable from here, my total accrued income is this much. My accrued income is 58,800. Okay. Now, already invoice, how much you have already given the invoice to the customer? How much invoice we have given to the customer? Do they tell you the question? Karthik?
50,400.
50,400 you already have sent the bill. So the remaining amount, you still have to send the invoice. So this amount, 8,400, this is called your contract asset. Okay. So I'll be very simple. 48,000 money I spent. Out of 24,000, 45%, which means 10,800, my profit has been accrued. So this is the profit I already have earned. So it means my total accrued income should be 58,800. And from 58,800, 50,000 I have invoiced, remaining is my contract asset. So your answer should be 8,400, which is your answer choice A. Okay. Listen, I just did these 2-3 short questions from IFRS 15 revenue. I would be doing questions with each standard short questions throughout the go, and then of course we will allocate separate time for doing more questions also.